Typically, investors will purchase stocks in hopes that they will rise and in some cases pay dividends. But some speculate that the price will decline, and just as one can profit from a rising stock price, one can also profit from a drop in the price. Short sellers can cause wild fluctuations and exaggerations in stocks as traders attempt to take advantage of events. Do they pose a risk and danger in the current market situation? You came here for the truth, so let me unveil that for you. Today we will have a brief discussion of what's going on with these stock shorts right now. I want to get into it right away. Shorts flee the U.S. equity market. Okay, very briefly. What we have here is a metric that is at a 3-year low after reaching a high in 2016. This is the short interest versus the float ratio in the U.S. markets. Okay, so you have a peak right here in 2008. Ever since then, it has been declining significantly. This brings us back into an area that is a few years old. Now, I just wanted to suggest that when you see short sellers at a high in 2008, it doesn't necessarily mean that the entire market is going to decline from here on out, that we can expect a crash, okay? What we have is, what I believe, to a large degree here, of course there's a lot of things going on, the short sellers have been pricing in, or anticipating, I should say, that what Trump, with Trump coming in right now, that you can see certain sectors of the economy are predicted to do well under Trump. Certain sectors of the economy are predicted to not do well under Trump. And this is affecting individual stocks or individual sectors, not all together. It's not necessarily saying that, look, the entire stock market is going to crash right now, or in this case here, there's less of a chance of a crash than there was a few years ago. That's not what it says. It works more like individual stocks. So keep that in mind. Let's move on to this as an interconnected chart where you see the total short interest. And once again, we come back into a few years ago right here, bringing you back into early 2014. One of the things that I wanted to show you was, this is the total short interest versus the S&P 500. And while we do see a correlation right now that sort of seemed to converge in 2014, and ever since then, it's really been tracking the same progress. It's something that I found interesting. I wanted to bring that to you. My points from the previous chart still remain for this. The most shorted stocks, so you're looking at these particular stocks which have been shorted right now, and you can see that over the past, let's call that over a year now, that this has been sort of trading in a range, moving in a range, and it has been, I would say not much change over this past little while, although the chart is trying to suggest that things are moving on a decline. I would suggest that it's hard to tell from this chart, but we're looking at, for the last year and a bit, we are seeing that there hasn't been much movement in those. So I believe that they are still anticipating what we had seen throughout this year. This here is the VIX, the volatility index, okay? One thing that's very clear is that volatility is extremely high right now. It does fluctuate. It has been going up and down. You can see a little difference here that for that brief moment between 2015 and 2016, this had changed. And now it's just like, it's gone ballistic, the VIX. And even look, compare it to what we had seen during the financial crisis, okay? And this is something that we need to really pay attention to. I once had a senior VP of a financial institution tell me, and I think this was in 2013, it could be 2012, probably 2012 actually, tell me that I need to trade the VIX. He said, you got to trade the VIX. That's going to be the big money for 2012. And, looks like he was right. But it's just, I told him that you're basically trying to profit from speculation entirely. And he said, yeah, so what? That's the money. That's where you make the money. And, if you know what you're doing, look, you can make profit. But it's just something that, where is the real asset? Where is the fundamentals? You're trading on things that are basically fictional. And that's where the market is making a lot of money. I'm making a lot of... there's so much to be invested in all of this senseless so-called investments. You're buying junk bonds. It says it in the name. Yet those are so popular. They are the driving force of the bond market in many cases. You look at the yields on some of these AAAs, and they're nothing. They're negative in a lot of cases. So people go to the junk, investors go to the junk, they trade them, and they get junk back. I'll tell you that for sure. All right, look at this. This is just a couple of examples. Twitter stock short interest continues to decline. This is just one example. I wanted to show you that, there was a lot of individuals predicting more and more and more of a decline in the stocks, Twitter stocks particular, and here they are declining in the shorts. Is that a suggestion perhaps that things are ready to increase? Not really, not necessarily. I just think that the market tends to overshoot in whatever it is. There's let's all get on the bandwagon, and then it goes way too far, and then it starts to back up. Another one. This one right here. Put it in front. Short sellers are cleaning up in Fitbit. Fitbit got destroyed throughout 2016. This happens to be yet another. So, you can profit on the way up or the way down. And unfortunately, a lot of investors, a lot of computer algorithms take advantage of it. And it really, really pushes stocks down. It hurts a lot of people that are really relying on that. This right here, just one thing to finish off with. United States personal income, you can see year over year over year declines. No coincidence that it's also correlated with interest rates. You bring interest rates down, people are not willing to save, and instead they get into riskier and riskier investments. They're going into the stock markets. They're getting into things they're not comfortable with. They think they know. They read a couple websites. They follow some people online. They look at Jim Cramer. They look at the alternative news, perhaps, following some garbage investment advice. They don't know what they're doing. They end up losing their homes, double mortgages, triple mortgages, and all the rest. Anyway, if you found this video informative, please give me a thumbs up. I tried to make it short. I don't think it ever works. But if you found the video informative, I know you'll find my book, The Money GPS, even more informative. So head over to Amazon, where they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care. Now, if you're still with me, just wanted to let you know that I have finally ordered the proof copy of my new book. So it is officially done, totally done. Unfortunately, I've been told it's going to take 10 business days. So today being the first business day, it's going to be a little while. But anyway, it's done. I told you I promised it'd be done. It's going to get here. I'm going to read through it, make sure everything's good, all the formatting is good. If that's the case, it should be up on Amazon very, very soon. As soon as I can get through it, just read through it. I'll make sure it's good. I'll put it up. You guys can have that. I know a lot of you have been asking, and I'm very appreciative of the support I've been getting. Take care.